All right, Tosin Osunkoya joins me right now. He is the Chief Executive Officer at Commercial Partners Asset Management. Tosi, good morning and welcome to the program. I can see you now.
Good morning, Nancy.
How
Thank
are
you
you?
for having me.
How are you? It's been a while. I think the last time we spoke was in December. So
Absolutely.
we shouldn't say
Yeah.
Happy New Year again because we are like 3 months into the new year. so so welcome
It's
to
more of the election year.
yeah, exactly. So welcome again to the program.
Thank you very
I
much.
I saw your report and it looks interesting. And let's discuss a few things about what you and your colleagues are saying about the economy. Let's start from the macroeconomy, really. Nigeria's GDP, overall GDP growth, was at about 3% in 2022. This is for an economy that the population growth is almost at 3% too. What does it really say for us that we were crawling as an economy in 2022? So give me your perspectives on that.
I think I would like to use the word, we're still crawling, actually. Quarter four 2022, we did 3.52, which is still abysmal to some of the other frontier markets, that are in the neighborhood of 5 or 6%. If you look at the annual, like you said, if you look at the annual rate, it's about 3.1 in 2022 compared to 2021 that we recorded 3.4. So by and large, you could say that there's been a contraction between 2021 and 2022. 2022 quarter three to 2022 quarter four, yes, there's a significant increase because 2022 quarter three, I think we recorded about 2.5. So yes, you could say that maybe we are moving away from 2.5 to 3.1, but on an annual basis, it's still a contraction. And you need to look at what is responsible for this. What is responsible for this? The non-oil sector, they've pretty much done well. Okay? The trades and services, for instance, they contribute about 56% to the GDP. Agricultural and industry, they've contributed, I mean, maybe slightly shy of 20%, to GDP. But the laggard is the oil sector. Nancy, Nigeria is an oil producing country. There is no reason for us where we should have, we should be struggling with gaining or having some accretion from oil production. So our oil production in quarter four, 2022, I think it went up to 1.34 million barrels, per day. And compared to the previous quarter, I think we were just in the neighborhood of 1.2. Our capacity is about 1.86. So you can imagine we're still a far cry from our capacity. So we still need to do a bit more work in terms of investment into the oil and gas sector. The PRA that was signed into law in 2021, I'm not sure it's been operational. While other countries, other oil producing countries are enjoying, the relatively high price of crude oil at this level of above $80, Nigeria is not benefiting from it. Yes, we've heard news about Focaros coming up and they will be in operation. But as of January, okay, we still have about 1.2 million barrels in production. That's still low. So in a nutshell, I think that yes, we could celebrate the fact that we are in a 3% growth, region, but I don't think that's something that we should applaud.
Okay, it's not something we should applaud. If we let's break it down. What are the other indices that we can look at least in February 2023? If we take a look at, okay, let's talk about inflation. We've seen that Nigeria's inflation keeps rising. What can we really attribute to Nigeria's rising inflation, bearing in mind that the monetary authorities, the Central Bank of Nigeria, have increasingly increased rates. At least in 2022, we saw the NPR being, climbing almost at every meeting. It keeps increasing, but inflation is still stubbornly high. What are the options that are available really right now?
Talking about options, I mean, I've said it at many for that We cannot continue to use monetary measures to address inflation. There's a lot of fiscal measures that we need to address as well. The food inflation continues to be the major driver of inflation in this country. The food inflation as of January was about 24.8%. I mean, high compared to the previous month in December, which was about 21.3. We continue to see that rise as a result of the flood incidents, in the northern area of the country. And of course, we continue to see those as a major challenge in addition to insecurity as well. The core inflation is still a major problem. So the core inflation, for instance, excludes food and energy. Energy is also a major challenge to us because the prices of diesel in the market is still relatively high. So when we continue to address inflation with, increase in NPR, it cannot solve the problem. Yes, that's one aspect of the solution. The other aspect of the solution is the fiscal authorities to come to the table to address all these challenges. Headline inflation right now is about 21.8 as at January compared to the previous month, which was at about 21.3. I think that we'll continue to see that, into the year. However, the disruption that happened because of the cash swap. The cash swap was a major disruption in February. We could see a blip. So what do I mean by a blip? We could see a mild, reduction in inflation, but that doesn't mean that, inflation is still not high in this country. I think it's still relatively high. If we're able to come out of the consequences of cash swap, we might still see inflation on the rise. Obviously, you know that the cash swap are giving us massive disruption in economic activities. So there has been supply of food and supply of goods and services, but there hasn't been a commensurate demand. Why? Because people don't have cash, or they don't have access to money to transact businesses. So that certainly would have an impact on the prices of goods and services.
Tosin, do you foresee inflation still rising because of this cash squeeze that we've experienced in the last few months? Because the last data we have, according to the NBS, was printed at 21.82% for January. So what do you foresee for inflation? Do you think it will hit the 22% range, or it will even go above that? Or would we still remain at that end, the 21% end, as it were?
Let me break it down for you, Nancy. If we don't restore our economic activities back to the level where it was before the cash swap, we would see a reduction in demand. The reduction in demand is not as a result of the bargaining power. It's because there isn't, a legal tender or cash available for people to transact or buy goods and services. So that's going to affect your demand. I don't know if you've seen some videos of food items, food produce that are being, left idle, rotten as a result of non-patronage. So that will certainly affect the prices of those goods, and it will affect the prices of services as well. So I don't think that, because we're expecting the prints to come out today or tomorrow, I think we're going to see a moderation in inflation, not just because there isn't a demand for it, a genuine demand for it, but it's because there isn't, the means to exchange goods and services, which is basically cash. So we would see that disruption in inflation as well, maybe for 1 or 2 months, until we begin to see some money coming into circulation and people have cash in their hands to transact business. And I foresee that might go into Q2. Q2, we might begin to see the real impact of inflation, or without core inflation or food inflation in this country.
Do you think that the Monetary Authority, when they meet in just a few days' time for the second monetary policy meeting for this year, which will happen in just a few days' time, do you think that the Monetary Authority would increase interest rates, still targeting this inflation that could also be worsened because of the cash crunch that we've seen. We see a lot of people trading naira for naira. It's not naira against the dollar anymore. We are trading against the local currency, which is a very sad situation right now in Nigeria. So do you think that the CBN's MPC would increase interest rates, still chasing inflation?
I don't think that's my view, and it's a view here at Commercial Partners. I think that they might, would stay older for now. They might want to see the impact of the hikes they've done in the last few meetings. Last one they did hike of about 100 basis points. So I think that they might want to, hold stay for now and see the impact of that before they do another increase. It's important for them to see that, because you also need to realize that there are several consequences to you increasing MPR. For instance, the yields on government securities are likely going up as a result of this. This could be one of the reasons why you have yields on government securities going up, because the market would expect that when CBN increases or the window of the central bank through the MPC, when they increase MPR, there is an immediate impact of that on cost of funds, on government security yields on government securities. And when I say cost of funds, what that means is that the banks literally will transfer the cost of that fund to the end users. The end users are the manufacturing companies, your SMEs. So they get it almost immediately, and that's going to impact their businesses. So I think, in my world, I think that it's important for them to hold on for now and see the impact of all the previous hikes they've done in previous meetings.
Okay, also in your report, it was interesting to note that you mentioned there that for Kenya, which inflation rate is at 9.2%, that Kenya, to tame inflation, Kenya had to resort to importing food items, thereby actually trying to bring down inflation. Do you think that's critical food items? Do you think that Nigeria should go this route to really bring down the price of food? A lot of people have said, okay, now there's the production of local rice, but many Nigerians are also still questioning the affordability and availability. Should Nigeria take this path?
No, I think, on the contrary, what Kenya has done is to look for import substitutes. Okay, so they're looking at local production rather than bringing in, importing food items. Again, if you look at Kenyan shilling, their currency has been relatively stable compared to ours. Theirs has probably depreciated in the region of 2 to 3%. Ours has done about 40 to 50%. So there's no basis for comparison. Okay, if we decide to import our food items right now, what you'll be doing is you're importing inflation into the country. Why? Because your currency has really largely depreciated. So it's going to impact on prices of goods and services. I think what the federal government through the central bank has done in the last few years is to encourage local production and local patronage of our local items as a way of substitutes to imported goods. And I think they need to continue to encourage that. If we're able to encourage that, you could see less reliance on imported goods, and that could, in a way, solve or help to solve the problems with, FX and with import bill.
Okay, let's talk about oil production. Just if you, okay, I actually did mention it during the business news segment that OPEC has said that Nigeria's oil production grew to 1.3 million barrels per day. You recall that Nigeria was struggling with less than 1 million barrels per day oil production around November, December of last year. But we're still short about 500K barrels per day. What do you think, as oil sector GDP still remains in the negative territory?
Yeah, the oil sector GDP still, contribution to GDP still remains, it's a contractionary region. And like I said before, that has likely been because we still continue to experience oil theft. We continue to experience damages to some of the pipelines. we should be in the region of 1.8, or 1.7 million barrels per day, but we're nowhere there. Okay, so federal government, I think that they need to do something about it. The crude oil price have come down from $120 to almost $83 right now. We've not benefited from that. That has actually should, or rather, that should have add to our accretion to the external reserves, but we've not benefited from that. The PIA, if only we could put that into operation, because the PIA is meant to address the legal, the governance, and the fiscal framework, address issues relating to interest groups within the oil and gas sector, and ensure that the foreign investors are able to bring in investment into this country to prop up our production. That hasn't happened. So if we're still struggling between 1.2 and 1.34, as of January, what we've done month on month is about 1.26 million barrels per day. And that's shy of what we did in Q3 or 1.2 last year. So I think that between Q3 and now, if you're still in the region of 1.2, 1.26, that means that we've not been able to address the issues with oil thefts and oil pipeline damages. And I think that the federal government needs to do something about that.
Okay, Tosin, let's talk about the financial markets. As an asset manager and all of that, with the other ancillary things that you guys do over there, what kind of advice have you been giving your clients in the last 2.5 months in terms of investments? Because if you take a look at the financial markets, what path should I take now? Should I go stock market, equities market? Should I go to Eurobonds market? Should I go to fixed incomes market? Where should I go to? What are you guys telling them? And if you're telling them something, what are the reasons for going a certain way?
I think that I'm sure that's what I'm about to say now would, in a way, through some controversy. But I believe that the next regime, okay, would bode well for this country, okay. And some people are already pricing that into some of the traditional asset classes. I will take, for instance, the equities market here today has done about 8.8%. That is on the back of positive expectations from the next, president. And we're beginning to see the same also playing out in the fixed income market. So the fixed income market to date, you could see yields on government securities in the range of, we started the year about 16%. Now it's come down to 15%. That is as a result of, one, liquidity in the system and the fact that people are taking long-term position, believing that yields on government securities might come down in the next few months. So if you look at those two asset classes, they are indications of positive expectation in the year, and people are looking into that. Another area that people are looking into and that we advise our clients are in properties as well. So people believe that they could go in now to buy some properties because they believe that the economic activities in this country would go up in Q3 and Q4. However, it's also important to look at the currency movement. So election is out of the way, potentially. You would expect that the currency will be relatively stable. Before election, we had seen ranges between 770 at a parallel market to almost 800. But it had come off to almost 750 and relatively stable at 750. What you will begin to see now is people are beginning to appreciate their Naira. In fact, Naira is not even available, right? So because Naira is scarce, you have your citizens appreciating their Naira and beginning to have confidence in their Naira. What that means is you might see less demand for foreign exchange. If the demand for foreign exchange comes down, you could see the Naira relatively stable at 740 or even go below 740. So you're not seeing people moving their money from Naira into dollars. They're actually keeping their money in Naira. If that happens, you'll begin to look at Naira assets. So those Naira assets are equities, pick the best performing shares in the banking sector. in industrials, in conglomerates. You pick also, if you go into treasury bills or federal government, bonds, you could pick some maturities that will give you good yields in the next foreseeable future. Then you also look at, properties. So we've been advising our clients that not to panic, that I think that the storm is over. We are moving into a region where we'd expect that economic activities would pick up, where we'd expect that currency will be relatively stable. And our GDP, if something is done to the oil sector, our GDP will significantly, go up. So I think that in 2023, we expect Nigeria to do it not extremely well, but better than last year. And if you're going to do that, you need to take some position in some of the traditional asset classes in the country.
Okay. Thank you, Tosin, for those insights. I guess for savvy people that are listening, they should be able to have taken away a few things from what you have said. But it's still going to be, quite interesting in the coming months. Let's see what happens, because business, business not a look face.
Are you saying, Nancy, you don't believe that Q3, Q4, Nigeria will do better than the previous
years? Yes, I do, but let's see what happens. Let's see after these elections, at least Saturday's elections are over. Let's see the footprints of what the president-elect will do. Then we can come back and talk about this. You know what I'm talking about. You know what I'm talking about, Tosin. You know what I'm talking about, Tosin. A lot of structural issues need to be done with, like subsidy and all of that. But I'll come back. That's a
major. That's a
Thank you.
In the room.
Thank you very much. Thank you very much. So I'll come back to you in a few weeks. Then we'll talk about it again. All right. I've been chatting with Tosin Osunkoya, who is the Chief Executive Officer at Commercial Partners Asset Management. That's it from us today. Join us again tomorrow, Thursday edition. I'll be here bright and early, live from the nation's capital, Abuja. It's about 3 days to the elections. Abuja, we're not going to be having elections, but definitely this channel will be opening up our election situation room, and we'll keep you up to speed with everything that will be happening. Up next is the news. I am Nancy IIloh, the best you can be, and be the change that you want to see by now.